Market update, February 13th. We'll just go through, cycle through some charts. The S&P 500, sell signal, still intact. Triple Qs, the NASDAQ, sell signals intact. The real estate sector, still, sell signal still intact. Let's do the 20-year bond, sell signal still intact. And the only sector that still has a buy signal is the commodities. So this is a ETF that buys a basket of commodities. With inflation running hot, it's the only sector that is still in the buy signal. Let's go back to the triple Qs. Take a look at what that chart looks like. There we go, triple Qs. And let's switch to a daily. So as you can see, we are selling off. We had a sell-off this week, and I think we're heading lower. We're going to be retesting that high volume reversal day. What day was that? January 24th, the low of the day. We're going to be retesting that next week. So that high volume reversal day made the market rally. I think it's just a bear market rally. I think we're heading lower. So we'll see. It'll be interesting next week. If we get down to the low of January 24th and the market can hold, if we get a bounce around that level, when some volume comes in, some buying comes in, then we'll have to look, we'll have to play it as the bounce may have further to go. The bounce meaning bounce up. If it breaks through that level on increasing volume, then we have another leg down. We'll probably be heading, like I said before, on another video, I'm looking at the support, last support. The last dip was over here in May, probably around, let me highlight that. We're probably going to be heading down towards the 320 level. Even if you do, I think the other day I used the Fibonacci's retracement levels to see where a 50% retracement would take us, and I think it was around that May low also. So if we use the 2020 bottom as our retracement level to the top, and there you go. So the Fibonacci levels for retracement, when you have a move, these are usually the retracements that happen. So the first level that usually get a retracement is the 38%, which happens to be right around that May bottom that I highlighted. So it wouldn't be surprising if we head down, start getting panic selling, and we get a bounce off that level, and then we start heading up. But these are the points on the chart that you should be looking for support levels. The 50% retracement of the move will put us around 286. So let me take this off. So you can tell there's some volume coming in Thursday and Friday. And Friday was the CPI came out, and we had a 3% sell-off on the NASDAQ. So again, just watch it. At this point, we are still in the sell signal. We're not buying any stock. I'm actually buying, but I'm sticking to stocks specifically in the commodity sector, and I'm not buying anything else. And I'm going to show you a list of my a list I'm using for my buys. And let me take it to my long-term portfolio. I got a sell signal. I'm going to be selling this one. This one's a real estate fund. So you see the red bar. So I will be getting rid of this position on Monday. And these are the positions I took this week. So I took a position in the SDS, which shorts the S&P 500. I took a position in Alcoa, which went up 14% this week. Took a position in an ETF that buys copper. And you can see there's a consolidation triangle going on since May. It looked like it was going to start to break out, but now it's pulling back, so we'll see what happens. This fund shorts real estate. This one is a miner, a silver miner. Same thing, you get this long consolidation triangle building up since August, building energy being built up. See if it breaks to the upside. And this fund here that buys wheat. So all commodity based. I'm going to take a look at, I'm going to show you gold. So here's a chart of gold. Gold started to break out Friday. I seen gold breaking out and oil. I actually thought that Russia invaded Ukraine when I seen these charts breaking out, but I guess they haven't invaded yet. The government keeps telling us any day now, any day. We've been hearing the any day song for like about 3-4 weeks now. Russia's gonna invade any day. So it wouldn't surprise me if next week we hear Russia tensions relax, which will give the market a little bit of a boost. Who knows? But the long-term trend is that inflation is running hot. Whatever happens in Russia is not going to change all the money printing that the Federal Reserve did, and now that we have inflation running hot. So even if we get a pullback over tensions relaxing with Russia and Ukraine, that's not going to change the inflation that's getting out of control, in my opinion. So here you go. You got the gold chart. You have a long consolidation triangle. Since 2020, it topped out. You had this uptrend, topped out, and it's been consolidating ever since. And now we're seeing gold break out. This is the triangle I had drawn for a while. Even if you were to, readjust this using this peak over here. I bought gold 2 weeks ago. So even if you adjust it, even adjusting your trend line using the 2021 top, gold is breaking out. Again, no guarantees. A breakout doesn't mean that it's a guaranteed to make money. You got to know your exit strategy. And the exit strategy on my long-term portfolio, my stop is at 163.91. As long as gold doesn't break 163.91, I'm going to take this trade and let's see if we can get a trend out of it. And then I'll show you my buy list for this week, for tomorrow, right here. So obviously I'm not going to be buying all of these, but this is the list I came up with. This is like my favorites list to buy. There we got. They're all going to be commodity based. So Archer Daniels, OBV's making a new high, confirming. Just going through this list. OBV's, well, you're going to notice them. Most of these, they're OBV breaking out. Shipping just seems to be consolidating. This is Conagra Foods. So I believe Conagra Foods, I think I got right here, General Mills is on this list too. These are companies I believe that if inflation gets worse, they have the pricing power to pass on the higher costs. It's food. It's either you take it or you leave it. And most people are still gonna have to put gas in their cars, and they're still gonna have to eat. So these are the companies that are gonna have pricing power. Energy. Some of these energies look like they're overbought. And like I said, a lot of this Russia-Ukraine news is probably causing a lot of people to buy. And if next week the tensions between Russia and Ukraine relax, we may get a pullback on these energy stocks. Metals. So this is the list I'm using to buy. I'm going to be putting some orders in some of these stocks. Chevron, like I said, some of these oil stocks look like they're getting a little bit overbought. They could pull back. So you can look at the symbols are over here on the left. You can take a look at these stocks yourself. OBV breaking out on this one. Mosaic, a fertilizer company, also breaking out to new highs with OBV confirming. Another fertilizer company, OBV's breaking out. This one's an oil company. Just keep an eye on these. This is what I'm sticking to. J.M. Smucker's, another food company. And just a lot of them have OBV breaking out, showing positive volume patterns. Same with this one, shipping company. And this one has a consolidation triangle here, a big consolidation triangle here in the bottom with OBV breaking out. So you can see, I'll highlight the points here. You got OBV where it is today, breaking out, breaking higher than this top. Compare that to where the price is today. Price here, the last time OBV was at this level was at this point. So OBV is higher than this high. That's the OBV divergence, which says there's been positive volume in this consolidation, insinuating that the price should break out. There's no guarantees that it's going to break out, but that insinuates the pattern I look at, that we're going to have a breakout to the upside. And it's in a favorable sector in the commodity sector. In the next list, this is my list for stocks that I'm looking to short. Same thing, just stocks that are breaking down. We've had this rally. Coinbase, I'm looking to short this one. It had that bounce. Not much volume during the bounce. Looks like it's ready to come back down. Same with DocuSign. Hubs rallied up to the 50-day moving average, and then we had this high volume reversal day on Friday, insinuating that it's going to come back down. All of these have this is an ETF that buys IPOs, and I'm looking to short this one. Nvidia looks like it's coming down, but this is the watch list I have. A lot of these, so I have a bear flag drawn on this one. So a lot of them have the same pattern. They're all like bear flags breaking down. We had these rallies, a bear market rally, suck people in, think, oh, it's okay, the market's going up again, it's time to buy the dip, it's a deal, and then, nope, it breaks down and breaks out of that bear flag, and down we go. Same thing, I don't have it drawn here, but you see these rallies, and now we're starting to break down. So that's my list of stocks that I'm looking to short. I'm not going to be shorting all of these. I'll probably put some limit orders on a couple, and we'll see what orders get filled. And so I showed you my long portfolio, and I'll show you what I'm currently short. I continue to be short Tesla, and these are just a couple stocks I'm short. Short Roku, short Upwork, pins, so we'll see. So as you can tell, I'm long commodities and I'm short technology. Google, I shorted Google the day that it jumped on earnings. When it jumped up 7.4% on high volume and it was unable to hold that high, I decided to short it. So Teladoc, Zoom, Burlington Coat, Twilio, same thing with Twilio. It popped up on earnings and it was unable to hold any of its gains. Came right back down. Sign of weakness. When a stock pops up, same thing with Snap. Snap jumped up 58%. First it was down with Facebook. Facebook earnings came out and Facebook crashed. A lot of the social media stocks crashed along with it. So Snapchat was down 23%. When Facebook went down, people started to sell Snapchat. They figured, well, Facebook went down and had bad earnings. When Snapchat comes out with their earnings, it's gonna crash too. So people sold it before the earnings even came out. The next day, earnings came out. The stock went up 59% in a day. 59%. I mean, just Just insanity. Down 23% one day, up 58% the next day. So I shorted it. I faded this rip. Short Neo, short Chipotle, same thing. I'm trying to fade this rip. Earnings came out, it jumped up. The story is that Chipotle is not experiencing any inflation problems, that they're able to pass on the cost to their customers. I'm not buying it. I don't think that at some point they're gonna have to. The inflation's gonna eat into their margin. So I shorted it. I'm trying to fade this rip. My short would be the high of that day, so 16.16. If it breaks above 16.16, then the trade's not going to work out. So if we get a rally next week and Chipotle rallies up, then I'll be getting out of this trade. But right now I'm willing to take the risk to short it and I'm fading the rip. And same thing with Hubs. We had this high volume day on Friday, marking a reversal day right at the 50-day moving average, and I'm playing that it's going to come back down. If it breaks higher than 596.17, then the trade is not working out and I will get out. So those are my shorts. Speaking about Snapchat, I want to show you, like Zillow. I think Zillow's on the list I was looking at to short. Yeah, so Zillow, take Zillow for example. They came out with news that they're firing employees. I don't know how many employees, but the market rallied over that news. So to me, it's just another up. The stock's definitely in an uptrend. You're going to get these sharp counter trend rallies, but the trend right now is down. So I'm not short Zillow, but I do have an order. I'd have to look it up. I'm not sure exactly what my order is, but the high is 58.25. I think I have an order to try to short it at 58. So for some reason, Zillow's touches 58 tomorrow, I will be shorting Zillow. And same thing with Peloton. Look at Peloton. Peloton obviously is breaking down. Was hitting lows. It's coming down, and then on February 7th, I think news came out. News came out that I think Amazon was going to buy it, or Amazon's looking to buy it, but Amazon didn't confirm it, the news. I mean, it's like a complete bullshit story. The SEC should be investigating that Wall Street Journal reporter and asking them, where do you get this information from? Well, is it just a fake pump? Is somebody trying to get out of the stock and they're pumping the stock up? I don't know. I'm just speculating, but I'll take you to Kohl's. Like Kohl's, for example. I was short Kohl's, and I got stuck with it, and I ended up having to get out of this position with I think it was like a 25% loss. But on January 24th, I don't know if there was Amazon. Somebody made an offer to buy Kohl's at $64 an hour, $64 a share. You can see the price closed at $63.71. But it was real news. Somebody came out and made an offer for the company. So that's why the stock popped up. Compare that to Peloton, where there is no offer for Peloton. First, the news came out saying, oh, Amazon might buy Peloton. And then other stories came out. No, it might be Apple. No, it might be Nike. Nike might be interested in buying Peloton. Well, Apple might be interested in buying Peloton. It's all bullshit news. These are all opinions. There's no fact. And the first story that came out should be investigated by the SEC. So that was February 7th. And on February 8th, news came out that they're firing the CEO. The CEO is stepping down. Yep, he's losing his job. He's going to lose his salary. Don't feel bad for him, though, because, he dumped $100 million worth of shares before the stock crashed. And then they're getting rid of, I don't know if it was like 2,500 or 3,000 employees. 2,500 to 3,000 employees got the boot. They lost their job. But don't worry. This is another great thing that the company did. They're giving them one free year of Peloton service. So I know you don't have a job and you don't have a paycheck, but hey, here's a free free year of Peloton service, and the stock went up. So I'm trying to short this one. I'm trying to fade this one also. But the interesting thing about this, I think Friday, I seen a story that George Soros liquidated his position in the triple Qs in the NASDAQ. He had something like $360 million in the triple Qs, and in December he liquidated it down to $9 million. But he had also bought a position in Peloton. So if he bought that position in December, if you look at the month of December, I don't know when, I didn't really look at what price he bought it. But I just find it funny that George Soros bought Peloton. He thought it was a deal. It ended up dropping from, let's say he bought at 40, it ended up dropping all the way down to 23. And all of a sudden we get these newspapers pumping stories that Peloton might get bought out. Could it be that George Soros is dumping his position to get out of a bad trade? I don't know. I'm just speculating, but the bullshit story that there's no fact. Amazon didn't come out and said, yeah, we're thinking about buying Peloton, or Apple didn't come out and say, no one said anything. These are all speculations that the company's going to get bought out. The first report came out, like they were reporting like it was an actual fact, like, oh, Amazon's buying Peloton, and then the stock jumped 20%. The next day, it jumped another 25%. So 55% rally in 2 days over somebody might buy it, and then that the CEO is stepping down and they're firing 2,500 employees. So to me, it's just a coincidence that George Soros happened to buy Peloton in December, and most likely he's dumping it right now. Could be, I don't know, well, maybe he's buying it for a long-term hold. I'm just speculating, but I just find it funny that the stories that came out weren't like real stories. There was no fact behind it. Like the Kohl's story, somebody came out with a hard offer. They're gonna buy, we want to buy Kohl's, and we're offering $64 a share. That's real news. So then, of course, the price jumped up to $63.71 and jumped up 36% in 1 day. That's real news. There's an offer on the table. But with Peloton, there's no offer on the table. It's all speculation. So if no offers come to the table, then this stock's probably going to collapse back down to the lows. I'm trying to short it at the high. Probably, it's at 37, probably around 37. I'm trying to short this stock. But if it opens next week, the stock just goes down, then I'm not going to get a chance to short it. But that's just my thoughts on how I look at the charts, and not only the charts and what's going on in the market, the sentiment of where we are in the market. So that's it. I showed you my list of stocks I'm shorting. I showed you my list of stocks I would like to buy. I showed you what I own and what I'm short. And that's basically what it is. S&P 500, the trading filter I use is still in the red. So I'm not buying any stocks unless they are commodities related. And the reason is because inflation's hot, and the ETF tracking commodity fund is in the green and making new highs. So basically shorting the tech and buying the commodities. So we'll see what happens next week. Probably going to be another volatile week. And watch that low. Watch that low. This is what's going to tell us. If we break that low, what's the number? 334. If we break 334 on increase in volume, then we're probably heading down to the 315, 320, 310 to 320 area. If it comes down and bounces up on high volume, then maybe the rally has some legs behind it and we can rally up. So that's what I'm looking for. And obviously, I know where my exit strategy on all my positions. And that's my thoughts on the market. Until the next video.